Hey everyone, how's it going? Welcome back to Prop Notes. My name is Andrew, and I'm a former professional trader from New York City. Today, what I wanted to do was I wanted to go over our strategy for the Leap. Now, the Leap, if you don't know, is the paper trading competition that TradingView just announced. It's available here in the community tab. You can see it. You can just click on this if you want to register for it. It's going to be running for the entire month of March, and there's huge cash prizes up to $10,000 for the winner. They're just basically judging it off of P&L, or basically realized profit, which I think is interesting. I was hoping that they would have maybe done something a bit more sort of risk oriented. That way, potentially, someone might make like a huge trade and it just sort of it just sort of pans out. Statistically, that'll probably happen because there's already, if you take a look, there's already 22,000 people registered for it. I'm sure there will be more in the future. So yeah, overall though, I'm really excited for it, and there's a few interesting things to know about it. First off, once you register, you can see that you have access to it based on, if you come into the paper trading tab, you can see it down here in your account section. You can see the competition. If you place orders, they don't go live yet. They'll go live once the competition starts throughout March. And one of the other unique things is that you can only trade 4 instruments. So you can trade gold, euro, the S&P 500, and Bitcoin. Now, if you know anything about prop notes, obviously a lot of the research that we put out is geared towards finding stocks that we think have the potential to make really big moves over sort of like a medium-term time frame. And so this isn't really our bread and butter. The competition is only going to be live for a month, and so um, there's no real opportunity. You just sort of have to go in and trade, not with too much eyes maybe to the fundamentals of stocks and all these different things, but just towards more towards the technicals of these sort of top symbols. Now that's okay. Obviously, like I said, I was a professional trader for many years, and so I have a strategy that I'd like to share with you today that just talks about, I just like to talk about it basically and how I'm looking to implement it within the competition. So without further ado, let me just pull it up here. What I'm planning on covering is just talking about the strategy, how it picks directional bias, where to trade, how to understand this is a place to take risk, this is not a place to take risk, um, where to risk, so where to put your stop loss, basically, and then position management. So how, once you have a position on, how do you sort of manage it over time? And then also on an ongoing basis, how do you determine how much money you're going to risk sort of per position? So anyway, that's what we're gonna discuss, and let's just jump into it. So here we have Bitcoin, and I've just rewound about like a month on Bitcoin on the 1 hour chart. So we can take a look here and see, essentially what the strategy looks like. And like I said, the first element really is directional bias, which basically just means how, as a trader, you're sitting down, you're looking at a market for the first time. Do you want to be going long or do you want to be going short? And there's a lot of different ways to determine that. You can look at fundamentals, you can look at technicals. Obviously, the more time you have, the more things you can sort of incorporate into your thesis. But if you're low on time or you just want to keep things simple, a really easy way of doing things is just adding a moving average to your chart. Now, a moving average, what it does is basically it just sort of filters out. If you're below the moving average, you only want to take short trades. And if prices are above the moving average, you only want to take long trades. So it's really that simple. You don't need to get any more complicated than that. And you can sort of play around with the settings of a moving average, or you can set it up however you'd like. But this is again our strategy, and we're on the 1 hour time frame. But you can see that we've set the input to 250 periods, which normally we have on the daily chart because 250 trading days is roughly what there are in every year. So that's just sort of a bit of a nod to that, coming down to a lower time frame, but keeping the same level of moving average. Now, the next question is where to trade, right? So where are you buying? Where are you selling? And to do that, it's very simple. And I should have mentioned this at the beginning, but this is a time-tested strategy. It's worked on tons of markets, tons of different time frames. It basically works pretty well on all markets. And that's not to say that it doesn't, it's perfect or you won't have losses, because you definitely will. But in my experience, sort of, if you trade it well, it's a good foundation. It's a good foundational sort of strategy, which is why I'm talking about it. So yeah, so basically where to trade. Now, there's sort of two kinds of trading methodologies. You can either be a mean reversion trader or you can sort of be a trend trader. Trend trading is a bit harder in some ways than mean reversion trading because the win rate is lower. So if you're betting that things, sort of go back to where they came from, oftentimes, you can win a lot of little wins over time, and then usually you'll have one really big loss. That's sort of the the P&L profile. And then the reverse is true with breakout trading. So if you're looking to buy into a breakout, into a trend, you'll have a lot of fake outs, but ultimately, when you do catch a trend, typically you'll be in it for a very, very, very long time. Now, we prefer breakout trading simply because, well, the win rate is a bit lower. However, it's very easy to know when a trade is over. And that's one of the things that we've found a lot of new traders really struggle with is, okay, you have this trade idea, you put it on, it doesn't work, like within a very short space of time. Okay, should I try it again? Like, how do you know when to try it again? That's a huge struggle, especially in sort of chop. That's where people get chopped around and chopped up in the markets, and that's not really what you want to see. So if you're trend trading, okay, this is the breakout. This is exactly the spot that I'm looking to buy something. If it works, it works. If it doesn't work, it doesn't work. But I know that was my sort of the one bullet in the chamber, so to speak. You can't keep throwing money at an opportunity that isn't there. So what we do is there's a really great indicator. If you can just type in swing into your indicators thing, and if you type this pattern smart one, it's public, it's great. And basically, if you just sort of add it to your chart, it looks like this. And what it does is it demarcates recent swing highs and swing lows. And so what we have here is a 10 strength on each side. And basically, we found that this is an excellent choice when it comes to figuring out where are places that you might want to take risk within the market. And so, for example, actually, let's just go forward a little bit on this chart until we get another setup. Here we go. Just waiting for a new line to appear. Probably get one soon. There we go. Okay. So you can see here that we have a support down here at 39,519 and a resistance up here at 42,491. So this is obviously a very large range. Typically, you'll have sort of narrower ranges. But this is a very large range. However, it's interesting because obviously this instrument, Bitcoin, has crossed the moving average, and now it's in this sort of zone where we're looking to take basically a shot long once it goes above this red line. And so we're just going to keep going forwards. And this is how we know when to take a shot, right? If it goes beneath the blue line, we're shorting. And if it goes above the red line, we're going long. And that's only because the moving average is in between the range. For example, previously, on all this previous price action, we'd only be looking to go short because you're beneath essentially the moving average. And ultimately what this does is it sort of improves your win rate a little bit. Typically things that are trending tend to continue trending. And so it just keeps you out of chop, and it sort of keeps you theoretically sort of on the right side of the market. So that's just good to know. But in this scenario, we're just going to wait essentially until there is a candle that goes above. Okay, there we go. And so we would have bought there at 42,491, and we would have basically placed our stop loss at the shorter swing. So this is the next bit, which is where do we risk, right? We basically put our risk, and you can see here we've got a third indicator, which is basically just the same indicator, but 3 and 3, and we changed the color. We've made it on a shorter time frame. So for example, if we remove the longer time frame, you can see here that the previous swing low is at 41941. So you can see that we are buying the breakout highs that are relevant here at 42,491, and we're risking essentially from here down to here. Sorry, grab the remote. So we're buying up here, and then we're going to risk down to this yellow line essentially. And this is our zone. This is basically our risk. So however much of this unit, however many units we put on, just checking time, however many units we put on, that's our risk. So however much, basically you can pick the quantity of the trade based on the zone here, based on the risk. So you've got 558 essentially points of risk. You've only got essentially, that's like $550 essentially in the instrument. Obviously, Bitcoin has very large ranges, but so you've got $550 of risk for purchasing one Obviously, if you purchase two, you've got 1,000 and 1,100 essentially, 11,000, 1110 risk, or 1,100, 10 risk, 1110. And it just, the more you increase the quantity of whatever you're purchasing or selling, that's the total amount that you could ever lose on this trade, because that's where you've got your stop loss. Now, if you let the trade play out, and so the main question from there is the position management. So now that you're in a position, you know exactly where to buy, you know exactly where to risk. So you know that's where you're putting your stop, is at the previous smaller range low, which we've identified. The final thing is basically just position management. Now that you're in the trade, how do you handle it? And so for this trade, basically the strategy that we're going to be using, obviously, again, like we said in the leap, is if there's 550 points of risk, right? You can see there's 540, 550, something like that. If there's that many points of risk, we're going to be looking to get that exact amount in a 1-to-1 ratio above. So we're going to be aiming to take half of the position off around here. So at 43,048, let's say. Now, we're taking half of the position off because that means that if the stock goes, or in this case, if the instrument goes all the way back to our stop loss, it's a break-even trade. Nothing, nothing ventured, nothing gained, but also nothing lost, which is fantastic. So you can identify a lot of sort of scenarios where you'll get a lot of interesting trade opportunities that it gives you a lot of at-bats, essentially. And so basically this is what we're aiming for. And then after, let's say we get it. So I'm just going to keep going forward. I think okay. So we've already gotten the profit. So we're already halfway out of our position, because we purchased, we risked, and then our take profit was, 43,050, something like that. The next step is basically just trailing using these yellow lines, just trailing until we get taken out of the trade. So for example, we're just going to let this go forward. And as soon as we get a new level, as soon as we get a new stop, we're going to update our stop loss. So obviously we wouldn't move it down in this scenario. We would just wait till there's one that's higher than our current stop loss. But what we're doing essentially is we're trailing. So we'll keep it tight as the instrument sort of fluctuates up and down over time. And so we're just going to wait until we have something like a lower level yellow line here. So far, we've just got new highs. Boom, there we go. So here you can see we've got our new yellow line at 43224. And so we would move our stop loss from there to there. And so essentially what we've done is we've locked in a profit so far. And then we're just going to basically trail and see where it goes and see how it goes. And it's coming dangerously close. Okay, there you go. And you got taken out. So it was very quick. Obviously, that was a very tight stop loss. So in this, sort of price scenario from where we bought to where things are, that was like a pretty good price to get out, comparatively towards sort of what you could have earned on that trade. But in general, that's just giving you an idea of, how much, obviously we took the trade long because it's above the line. Where do we trade? We're purchasing once it breaks out above a certain level. Where do we risk? We risk to the recent sort of pivot low. If we're going long, obviously you risk to the recent pivot high if you're going short. And then the position management, just, you're taking half off once you get your 1-to-1. So it's a free shot. And then you sort of just trail the rest and see how much you can make on it. You just you can be greedy. You can be really, really greedy with the remaining position if you feel strongly about it. So that's basically 80 to 90% of it. The remaining bit is, determining how much you'd like to risk per unit. So this basically just means, obviously these are leveraged accounts we'll be dealing with in the trading account simulator or in this, paper trading competition. The real question is basically just how much do you risk per trade? So let's say you've got $250,000 of equity, which is what they're giving us. Our preferred amount of risk per trade would be somewhere between, 3 to 6%. You could maybe say just on average, just say if there's 5% risk per position. And what that would do for you is essentially it gives you 20 unique and individual shots to make money over time. Now, the strategy broadly, and we've tested this on stocks. So, and also, sort of in my history trading, I've traded it on futures and FX and crypto and stuff like that. I would say it has a win rate roughly of about 50%. So 50% of trades, you'll make money. 50% of trades, you'll lose money. But obviously your max loss in terms of risk can be 1. But 1x. So let's say you risk $5,000. The most you can lose is $5,000. But if a trend sort of gets going in your direction, you can make 4, 5, 6x that $5,000 on that trade, right? And most trades probably end up somewhere between like 0.5 and 1. So they make like, I don't know, 0.66 is a pretty common amount that you'll sort of get out of a trade. But, over time, the numbers sort of do work out if you test this on a lot of stocks over a long period of time. So that's generally the sort of trading strategy that we're going to be using in the LEAP competition. Obviously, like I said, mostly focused on stocks. So if you're following us, if you want to follow us for more stock ideas, that's mostly what we post. However, we just thought it'd be fun to sort of put out our trading strategy for this competition and just maybe get some feedback. We'd love to hear what you guys are, trading or planning on trading for the competition. And yeah, so I just want to go through and maybe just play out another couple trades just to give you a sense of, obviously now we're looking for a long above here. And we're not looking for a short because we're above the moving average. So we're just looking for long trades. There we go. So we're looking for long trades still. We'll probably breach. There we go. So this was a little bit of a breach here. And then if you were to look at the recent risk spot, it would be down here. So basically you would have bought this spot. Based on how this looks, just like chart wise, it's probably not going to do very well. Yeah, this would have been like you would have lost essentially one full risk unit. So air quotes like 19 to go if you're risking 5% per position. Just continuing, going to turn off the stop losses. There we go. There's another breach, and then this will probably, again, this is sort of iffy. So yeah, you're risking all the way. You buy here, and you're risking all the way down to here. There you go. So basically, you would have moved the stop from here to here, and then you would have gotten taken out for maybe like 0.7% risk units. So that's another loss. That's fine. Also, I've traded this so many times that you just sort of have that inbuilt confidence in the strategy. So over time, you just know that you're going to be finding yourself in the right position. Okay, so here's another long. This looks a lot better. There's sort of clustered resistance here that it's sort of wicked up into a couple times, but now we have some strong candles. So this looks like a good buy. You're risking down to this 42,805. Obviously, you're only going long because we're above the moving average. And then basically we're just trailing, or, we're looking to get our 1-to-1, which would be, in this case, 568. So we're looking to get 568 points long. So somewhere around 43,927 is what we're looking for. Okay, there you go. So you got your 1-to-1. Now this is a free shot, and you can be as greedy as you want on half of your position. So I'll just let this play. And I'll turn this off so we can just see the yellow, because we're just going to be planning on basically tracking up our, okay, there's our yellow. There's our new yellow. So we would have been taken out of the trade right here, basically. But if you're looking at this like, oh, shoot, I'm missing out, you basically would have been taken out of the trade here, and you would have re-entered here probably at the same level of risk. So this would have taken you out at profit, and then you're back in to immediately like another profitable trade. Just based on where the red was. Okay, we're getting tight here on the yellow. Okay, and you're taken out there. So basically you were long from all the way back here to here with only a brief stint where you weren't. So this is sort of the power of trend trading. For example, there's a few trades that work. There's one trade that works, two that don't, and then you sort of manage to get yourself into a trend where you can really squeeze sort of the risk reward out of it. Anyway, that's the strategy we're going to be using for the LEAP. Just wanted to put it out there. Hope you guys have a great rest of your day. Give us a follow if you're interested in sort of stock stuff like that. And best of luck. Hope you win the 10,000 G's.